Around the first of the month, a lot of us have to pay for the house we're living in. For some, that means a mortgage payment. And if you can't pay right now, the federal government is letting you temporarily postpone payments. That's called forbearance. What exactly does that do, though, and what are the long-term effects? We asked a mortgage expert. Julie Felsman is a mortgage originator with Guaranteed Rate. She says plenty of clients she's helped get those mortgages are now reaching back out with questions.
As all this came up, lots of my old clients have reached out with questions about forbearance and what to do.
In March, Congress passed the CARES Act. It blocks lenders from starting foreclosure proceedings on loans through May 17th. It also gives homeowners the right to request a forbearance for up to 180 days and then an extension for another 180 days. No fees, no penalties. But here's the key. You have to talk to your loan servicer to get it. And your loan has to be backed by the federal government.
One thing I've suggested my clients do when they reach out to me is, first of all, figure out, does your loan fall into that category? Because if it is, then it is covered under the CARES Act.
Forbearance does not mean your payments are forgiven. You'll still pay. Some options Felsman says she's seen are additional payments added to your mortgage spaced out over a number of months, additional payments added to the end of the mortgage, or all of the payments due at once at the end of the forbearance period. But the Federal Housing Administration says no one should be required to pay that lump sum.
What will be offered to you on your mortgage is going to be something you have to talk to your servicer about.
Housing advocates say some loan servicers are trying to scare borrowers into making payments whether they're able to or not. Felsman says she hasn't seen that, but remember, servicers are a business like any other.
Every mortgage that someone takes out is actually an investment for someone else.
Those who are able to make payments might be tempted to choose forbearance anyway and keep the cash. Felsman says be careful, because while you can't get reported for delinquencies, there will be holes in your payment history.
Speaking as someone who helps people get mortgages, I can tell you we look at mortgage payment histories really, really closely as a part of that process. When someone comes to me and says, gosh, I want to get a mortgage, we will want to verify the payment history on that mortgage, and it will be apparent that there was a period of time when payments weren't made.
And with long-term mortgage rates now at record lows, refinancing might seem like a good idea.
If you're looking at applying for another mortgage, if you're looking to move, or you are hoping to take advantage of lower interest rates and refinance, there will almost certainly be implications, and you have to balance those.
Yeah, some takeaways for borrowers. Call now to tell your lender if you can't make a payment. Servicers are extremely busy, and it's important to reach out as early as possible to get the process going. Ask questions, and once you've figured out a plan that works, make sure that you get it in writing. And again, the CARES Act only applies to federally backed loans. So if you have a private lender, make sure you check with them to see what options are available.